Good morning, everybody. It's the 4th of August. We are Signal Centre Talking Ball. I'm Joe, joined by Stevie and Jamie. Stevie and Jamie, good morning. How are we doing?
Oh, good, thanks. I do like Stevie actually. I think that could
Yeah,
stick. How do you feel about that, Steve?
I feel all right. It's Stevie, actually. It's not Steve.
Yeah,
Yeah,
I
that's my
feel
bad.
good.
excellent. Right, let's get cracking today. Steve, you've got to get off a bit earlier, so we'll do our best to crack through as much as we possibly can before then. In terms of the latest headlines, the ISM manufacturing numbers beat expectations yesterday. The index strengthened to 56.7 for July from a previous number of 55.3, and that was well above the consensus forecast of 53.5. So a bit of encouragement there. The prices index declined by the largest amount for over 5 years and registered the weakest reading since March 2021. So a bit of good news, bit of bad. In terms of the Fed inflation warnings, they continue. The San Francisco Fed president reiterated the hawkish stance with comments that the central bank has not completed the fight against high inflation. She added that the markets are getting ahead of themselves in pricing in rate cuts for 2023. In terms of US yields, we saw the bond yields increase to a peak of 2.83% yesterday before a retreat to 2.75% later in the session. And there was a further net retreat in yields today as it traded around 2.72. The Swiss inflation number was unchanged. The number for July compared with the consensus forecast was for a 0.1% decline, although the year-on-year rate was unchanged to 3.4%, which was slightly below market expectations, which could be a good sign that inflation may be reaching some sort of peak or plateau. And today we have the Bank of England, and the market is expecting a 50 basis point rate hike from the Bank of England today. That will be announced at 12 o'clock UK time. The consensus forecast for a further increase of 50 basis points to 1.75%, with the minority backing a 25 basis point increase. Forward guidance from the bank will also be very important for market reaction, which will follow shortly after the announcement. Okay, so that's that for the headlines. Steve, let's take a look at some markets to kick us off. You're going to kick us off with cryptos by the looks of things.
Yeah, I'm going to have a look at Bitcoin to start with, then dive into commodities. Bitcoin this week has basically done nothing in terms of what Bitcoin usually does. If you look at the weekly chart here, this is the little candle that we've got. It's a mere, let me work this out, just over 1,000-point move either way in Bitcoin, and it's negative at the moment compared to where it closed Sunday night. But only just. It's really, there's nothing to talk about. It's amazing, this can grind to a halt so quickly. However, if we look at the daily chart, we can see that where we are with it. It's we've had this corrective channel from the lows that we hit of 17,650 all the way up to 24,300. Around this area, we've found some resistance. The 21-day moving average is we're sitting on it at the moment, 22,630. That's the support. We've had 1, 2, 3, 4, 5, 6 negative days of price action where rallies have been sold into. However, this support at 22,600 could prove to be a bit of a saver for Bitcoin. If we look at the 4-hour chart, the Ichimoku cloud is the trend higher, the short-term trend higher is providing some support also here, and pretty much just waiting to see where the next sort of trend will come from. From a trading perspective, setting longs around these levels with a very tight stop could prove to be quite decent. But overall, my view is that Bitcoin will continue lower. The real sort of like test would be whether we can push prices, or whether prices can go above the 28 to 32,000 level. For me, that even a retest up to there would we'd still remain bearish overall on Bitcoin. Sorry, Bitcoin fans. On the commodity side of things, looking at gold, we saw a couple of days ago, gold posted a shooting star type candle, and yesterday we had a little bit more positivity come into the market. That we had a dip lower, again found support at 17, just above 1750, 1753. and we managed to close a little bit higher than that, 1765. Trading currently at 1771. There's still potential for a little bit of upside. There's a potential channel. This downward channel has a potential trend line here. We've only got 2 points in it on the top trend line. Currently today, that comes in at 1811. Resistance at 1787, which was provided by this dip lower from the 16th of May. So still, again, similar sort of price action to Bitcoin, really. A little bit of positivity on the short-term chart. But overall, it feels like we need to retest this 1678 area, just below which we've reacted from more recently. But yeah, a further upside really needs to take out levels around about 1880, which is a long way off at the moment, over $100 away. So yeah, silver. I looked at selling silver yesterday on the Untitled Challenge, which you'll see. This still holds true. The 2045 resistance, and that's been quite a significant price in the past as well as just more recently. The swing low from the 13th of May, providing that resistance. So all the technicals are doing a similar sort of thing, even across different asset classes at the moment. But predominantly, these are quite dollar based as well. Remember. So yeah, on the support side of things for silver, 1978. That is where we reacted from yesterday. The 21-day moving average is well below that at 1922, and the more serious support level would come in around about just above the $18 level on silver. Crude oil had a bit further downside yesterday, so it looks like we can for a little while anyway, just negate this potential head and shoulders, inverse head and shoulders formation. The real price or level of area to watch is around about the $88 level. It feels like we're heading down there to retest it. 3 days of negative price action, and we're below the 21-day moving average. So we can see that there's 92.27 provided decent support a couple of times, were 2, 3, 4, 5 times, and now we're below that. It could provide a little bit of resistance today. That'll be the level to watch if we do get a rally out of today. So yeah, for me, WTI crude oil on the back foot really. So, but yeah, a lot, as I say, a lot of this is based around what the dollar's doing at the moment. So Joe can fill us in on that.
Yeah, sure. Thanks, Steve. So in terms of the US dollar, yesterday that broke out of the triangle or the wedge pattern that seems to have formed on the daily chart. It was looking pretty positive at one stage, but actually ended up closing where it opened. So fair amount of indecision still in that market. That's following on from that bullish outside day candle that we published on the 2nd of August. So bit of a retreat again today, only mildly lower. Overall, the trend still remains bullish, but we have seen some evidence of buying support come back into the market for the dollar index. So overall, still remain bullish, but ideally would have liked to see a bit more of an impulsive move higher from this the break of this small consolidation pattern that we've got on the daily chart. In terms of what was happening elsewhere, if we take a look at Euro US dollar, following that bearish outside day candle that was posted on the 2nd of August, sorry, we also got another doji candle yesterday with this particular market. So real signs of indecision here at the minute. Obviously, the overall trend remains bearish, so that's where we are siding still and believing that we're going to see lower prices down towards this parity level, which was defended so robustly back in mid-July. Taking a look at cable. Again, a bit more indecision, failed to make any headway above the high that we posted on the 1st of August, posted an engulfing candle the following session. Yesterday, more indecision, fairly large range, but no real direction in either way, to be honest. On the front foot again today. We've seen quite a decent move in some of the riskier assets like the Aussie currencies and the New Zealand currencies. Decent turnaround yesterday following that aggressive turnaround that we saw on the 2nd of August. There was a couple, the ones that are linked to yen looking really nice from a technical perspective. So Aussie yen, we saw prices move sideways for some time. We've got a big support level here at 91.42. We had a real good look below that, but that was defended very nicely from the bulls, and since then we've seen some decent follow through to the upside. So that's worked out quite nicely from a technical perspective. It was a similar situation on some of the other yen currencies as well. Euro yen, really nice pullback into this major support band here that we've got on the daily chart. Really strong turnaround and follow through buying has been seen there too. Some of the New Zealand currencies, take a look at that. New Zealand dollar, Japanese yen, really nice technical move here. So we've got trend support, we've got horizontal support here at 82.97, all of which has been defended really nicely and looks set to maybe move back towards the highs on that one. So looking pretty strong there. On the indices, now there were some really good moves on this yesterday, particularly from the Nasdaq, really outperformed quite substantially, broke through this resistance level at 12,941, took it out very cleanly, closed almost at the highs of the session. We are pretty flat today, but we are also approaching some downtrend resistance here. So maybe we will get some sellers step in potentially, but it looks to be very much on the front foot. I'm not sure if it's one to believe, because overall I still think the overall trend is negative. Also worth pointing out, from the highs that we posted on the 22nd of November down to these lows here on the 16th of June, we've got a 38.2% fib level, which pretty much capped the upside move yesterday. That's at 13,226. Looking at it on the weekly chart, because this is quite interesting too, we talked about this volume point of control, which is at 13,095. We're actually above that at the moment, and we're closing above Steve's magic 26 period moving average there as well. But obviously we're not finished the week yet, so we need to see whether or not it can sustain that and manage to close above it on the weekly basis. So feels like it could be attracting new buyers to come in at these levels in the fear that they might be missing out. But obviously we've already seen a pretty strong move from the lows. So I'm wondering whether or not that could be potentially a bit of a trap. So do be careful if you're committing to stock markets at this moment in time. It is obviously summer months as well, and that can throw up some false signals because generally these moves are on lower volume. S&P 500, that had a strong move yesterday as well. Let's just flick back to the daily chart here. We posted a bullish engulfing candle, and we are trying to get through resistance here. We've got a band drawn on the chart between these levels here at 4,139 to 4,110. So nice close above that. Remains to be seen if we've got the interest to drive this higher. Above that, we've got a 61.8% fib at 42.54 to target on the upside. DAX was quite interesting as well. Decent move higher. That's completed that double bottom pattern that we've got here on the chart. So these are the two lows that we were focusing on. This was the neckline of the pattern. We measured the move up to 13,663, and we just tapped into that this morning. So objective complete there effectively on DAX. In terms of the next upside target, we could be looking for a 1.618 extension of that double bottom pattern, which comes in at 14,057. So that's looking quite strong as well today. I'm just going to finish up on the FTSE 100. Not generally the best market because it's affected by a range of factors, including obviously the US dollar and what the commodity companies are doing, but it looks to be performing quite robustly. It's certainly outperforming a lot of the other major indices. We're fast approaching resistance at 7517. So we've got a low here to consider as resistance from the 1st of June, and also a 78.6% fib level of this move here from the highs in April down to these lows in June. Now, the reason I bring this up is because we've got the Bank of England today as well, so that could create some volatility here in this market. As we know, it is quite heavily linked to what cable does as well, so bear that in mind. That's it from me. Jamie, what's cracking on the stock side of things?
Thank you, Joe. Yeah, we'll dive straight in with our biggest loser of the day, and the biggest loser of yesterday was the biggest gainer of the day before. We're still looking at this HKD, this AMTD digital, which was up, I think we said 20,000% over the last kind of 3 weeks, which is pretty crazy, but down 34% yesterday. I think this one's going to be pretty volatile for a little while to come. Certainly a lot of room to move lower. But yeah, down 34.48%, as I say. On the flip side of that, we've got QNR, which is a pharmaceutical company, up 360%. Let's have a little look why, see if we can find it. No, we're looking at the wrong thing again. TradingView needs to sort this out. Here we go. Let's try change it, come back. Give it a little juke. See if we've got any info. Do we see QNR? No, that's too much reading for this time of day. Try one more. No, we don't. But up 360%. A pretty nice move there. We'll have a little look at a heat map, and you can see it was a pretty strong day, as Joe was alluding to. Pretty good day all round. The only sector that was really down was energy, but if we look at Amazon up 4%, Apple almost up 4%, Google 2.5%, Microsoft 2.8%. So a pretty nice day all round. It does feel a bit FOMO at the moment, as you were saying, which worries me on a slightly longer, well, not longer term, but how much really is there to this move higher? Is there a lot behind it? We'll have to wait and see. But we'll dive into a few specific stocks. And I wanted to look at Apple, and this is a little bit different, but I wanted to pull up an indicator called relative ratio. So this highlights the strength of Apple against the S&P 500. And why this is interesting is that I read yesterday that Apple hit its highest ever relative strength against the S&P. So if I bring this out to a weekly chart, you can see that obviously Apple's done very, very well for a number of years. But in the last kind of week or so, it has broken new high ground on its strength against the S&P. So just thought that was quite interesting and worth having a look at there. It's had a pretty good rally. I mean, this is the 5th consecutive week in a row now. We would be closing higher if we do close around these levels. So it's been pretty fast in terms of a rally. But if we look at the volume, as we were saying, the volume is starting to come off a bit. Let's get on the, what are we doing? Here we go. Let's bring on the moving averages. So the 20 period average for volume for Apple is down on the last, well, for the entirety of the rally actually, which is kind of what I was saying, why I'm a little bit worried perhaps that this is just a bit of a rip rally before a bit more of a sell-off. But you don't want to jump the gun on that kind of thing, so we'll have to wait and see. AMC, we looked at this yesterday. We'll bring it down to daily chart. We're almost at our take profit now, but this as well is pretty much ripped up off this support level, which has been really good for anyone that managed to catch this idea. Earnings look like they're coming out after close today, so we'll have a little look at the corporate calendar later and see what's expected from AMC. But certainly some pretty positive price action going into earnings. Actually gapping up a couple of times. The volume's picking up as well, so good signs, but you never know with earnings, so be careful if you're thinking about trading that today. AMD, we looked at that yesterday. This had earnings on, when did this have earnings? On the 2nd after close, and it's still hanging around this trendline resistance. The volume is clearly picking up. We can see at the bottom here. A weekly close above this resistance would be really positive. I mean, if we can kind of get to the highs of the week, so we're looking at trying to reclaim this $100 level. That would be certainly looking pretty positive, because at that point, hopefully, we get a bit more volume in. But you can see, as we were saying earlier, the volume is starting to fall off, even with earnings this week. So yeah, just want to be a little bit careful of there. Amazon, why do I care about Amazon? Up 4%, that's obviously nice. We're still at this resistance level though. This previous support has now become resistance. We do look like we'll be closing above the 50% Fibonacci retracement. But again, still quite low volume on the week. I know we've got 2 days left, but you'd think, well, when did we have earnings? Oh, we had earnings last week. So, but yeah, indecision this week, which is, I mean, to be expected after this kind of a move. We'll have to see where that closes on the week. Want to take a look at Coinbase. So obviously, I like to highlight the winning ideas we put out. I've got to highlight some of the losers too. We tried to sell this at this resistance level with the volume coming off. But this, I mean, this pumped up really quickly, up 20% yesterday alone, right into this longer term resistance which you saw here. So we can get rid of this trade idea because this one is sadly gone. And look, I mean, we're just between this slightly bigger channel we saw here. Had a little look at what spurred on this 20% move in Coinbase, because it didn't seem to be anything specific related to like Bitcoin or Ethereum, as Steve was saying. There's not really much moving on that at the moment, but it looks like Coinbase ex-manager pleads not guilty I don't know if that is enough to spur a 20% move. But yeah, insider trading charges. This happened yesterday at 6. Well, this was written at 6:20. So if we zoom into a smaller chart, it looks like the move happened before that news was out, but maybe it was linked to that. But regardless,
maybe someone had inside knowledge that that was going to come out.
Yeah, I mean, you may well be right. I mean, that was when the
inception of inside trading.
Insider trading inception.
Inside.
But yeah, I mean, we're right at this resistance level. If we check this out on a weekly chart, even with that big spike in volume yesterday, the volume is still down at the moment. I know we're only on Wednesday, so I don't want to get too carried away. But the volume is coming off, and I'd really, to see any kind of, what am I looking for? To believe, I guess, in this move upwards, I really want to see the volume start picking up above these previous couple of weeks for me. If we finish below this 20 period average, I'm still very much in the selling rallies team for Coinbase here. But regardless, a nice move. We're at this resistance now. Maybe we'll try selling that again. It seems like a nice level to be giving that a go. What else have we got? Fiverr, nothing to see there. Bounced off that support level quite nicely. Meta platforms, we're still range bound here. It's pretty tight price action. I mean, the 61.8 fib and this resistance level at 170, 150 have been doing a real job. Since throughout June really, and into July. It's really, really tight price action. Looking for a break either way, and at the moment my bias is a break to the downside. Moderna, look at this. We've had a really nice move off the back of earnings for Moderna. We spotted this flag type pattern here. Price got really tight just before earnings, which isn't a complete shock, but went right into that previous kind of resistance level we got here. This swing high. So yeah, a pretty nice technical level there that's holding up nicely at the moment, but we'll see how that lasts. Again, if we can kind of, it's not perfect, but something like that. We're very range bound again on Moderna at the moment on this more medium term outlook, but get rid of some of these now. It gets a bit messy, but I mean, that's a pretty nicely defined range there. So a nice move up from Moderna, up 15, almost 16% on the day. What are we finishing off on? Pinterest, we checked that out yesterday. Earnings right into this previous resistance, sold off a bit on earnings and not a lot of movement yesterday. We're looking at Plug. No, I don't care about Plug today. Peloton, look, yeah, we had a winner. We have some losers, we have some winners. Peloton, just this support level, doing a really nice job. We talked about the logic behind this, having this tight stop and trying to buy that into the resistance, and that was a nice 3.22R move that happened in just about a week. So hopefully some people were in on that. Finish off with Tesla. This is, I mean, since earnings, this has just been flying really. A couple of low volume pullbacks here. I mean, this would have, again, perhaps been a nice level to have a look at. This kind of level here might not have got filled, but you see the volume starting to come off this on the retracement, and then the buyers really picked that up pretty quickly. So yeah, this one's been flying. Volume again is slightly lower, but this one isn't as bad as the other ones we've seen. This is a really messy looking chart. Let me get rid of some of this rubbish and adjust that. There we go. So yeah, I mean, certainly a nice rally. If you look on the right side here, it's all pretty much all green, with some really large moves in some of these. But I don't know, Joe. Maybe I'm being a bit of a pessimist, but I'm just really not convinced about this at the moment. And I'm feeling very, very wary about where these stocks are moving on a slightly more medium-term level.
Yeah, it's certainly a challenge.
Starting to sound like me, Jamie.
Yeah, Steve's rubbing off on you for sure.
I've got to shoot, so I've left my trade idea on there, so Joe will do it, and I'll catch you all tomorrow.
Thanks, Steve.
Cheers.
Nice one, Steve.
And thanks to San Hadid for your 500 coins for saying thanks for the stream. That's much appreciated. I don't know what we do with those coins.
No idea. But
I'll have to start analysing those.
Yeah. Cheers.
Yeah. Okay, Steve. Catch you later. Yeah, it's a difficult one, Jamie. I think there's a big issue. Well, not an issue, but now we've got to a point where it's either do we start believing this rally and start committing to it, and fund managers will be going through the same sort of anxieties because obviously they've got benchmarks to try and hit. So yeah, it's a difficult one. Do they start chasing now in the fear that they might be missing out, or is this just sucking in those FOMO traders before we then see things start to turn lower. Difficult one.
Yeah, it does feel like the latter of what you were saying. I feel like until I don't know. I feel like chasing this market at this stage is going to lead to some pretty quick stop outs if people are trying to buy at these levels, because all these stocks feel a little bit overextended at this point. So I think honestly, to really help the bull case, it would be helpful if we had a bit of a retracement to kind of clean this up a bit before a bit of a rally higher. But at the moment, it just feels like it's ripped up too fast, and I don't know, bit of a worry. But we'll have to wait and see.
Yeah, well, we are in a bear market still. That's not disputed, and bear market rallies can be pretty vicious, as those that have traded them before will know. They can, provide these rip your face off rallies, and really challenge your resolve as to whether or not you jump in or you stay firm on your position. So we'll have to wait and see what comes of it. But obviously, risk management crucial in all of this. So let's move this on to the gun to the head challenge. So this is where 3 of us pick a trade idea live on the video each day. All of these trade ideas that we come up with must have stops and targets. They must also be placed at market. The ideas will expire at 9 p.m. UK time, or when the stops or the targets are hit. So we need to bear that in mind. They are all published to our TradingView profile. So if anybody wants to check those out, please feel free to do so. Let me just bring up the page now so you can check that out. It's signal_center. So yesterday, sadly, we all got stopped out in our trades. Jamie was selling New Zealand dollar, Japanese yen. Steve was selling silver. I was buying cable, all of which were stopped out. So not really much point in going into the details there. We all lost 1R. So let's crack on with the next round of ideas. So Steve, as he said, he's had to drop off, but he has already published his idea to TradingView. Now he's taking a look at cable today and he's selling it, and I imagine that's something to do with the fact that the Bank of England have got the latest interest rate decision coming out today. He suggested here there was a bearish engulfing candle on the daily chart, and the shorter term charts resembling a head and shoulders formation. So he's calling this, I guess, the left shoulder, this the right, and potentially, sorry, this the left shoulder, this the head, this the right. I'm looking for lower prices there. So he's entering at 121.65. He's got a stop loss at 118.65 and targeting, sorry, that's the target is 118.65, and with a stop loss at 122.40, looking for a 4R return on that one today. And we'll come on to the calendar in a minute, because quite interesting that how volatile cable and anything linked to sterling can be in and around the Bank of England. So we'll come on to that shortly. I know there's some requests there as well, so we'll get to those in a moment. And Jamie, can you give us your idea? Have you got one ready?
Yep, I do. So I'm going for one of my range plays today. Honestly, not loving the price action at this support level, which I'm seeing on Euro New Zealand dollar. But it seems like a pretty decent level. I mean, with where prices are, it's already moving the other way. So for me, it's worth a bit of a buy. Obviously, we've got to call these ideas live on stream, so can't wait for other currencies and whatnot to get to the levels I'd rather buy. But this looks like a pretty decent spot that we're at currently on Euro New Zealand dollar. So looking to buy this at current price, which has moved up sadly. So we're now trading at what, 161.58. So we're gonna have to move that up. We're gonna have to play around with the stop loss as well. We have to just tighten that up a bit there. So ideally, I'd keep my stop loss below kind of the lowest level of support. But to get the risk reward I'm after, I'm going to keep it under the previous swing low, which was here on the 1st of August, and obviously the low we've had today. So we'll keep the stop loss at 161.33, and then the take profit, I've just aimed for this Fibonacci retracement from the high of this move to the low. So this is a 38.2 fib. So for me, this seems like a pretty decent kind of just a retracement, because the trend is still bearish for me, but this kind of pullback seems pretty healthy before possibly a move lower. So aiming for 162.18 on my take profit, which gives us a 2.4R risk reward. So yeah, hoping for a little bit of a move higher on Euro New Zealand today.
Lovely. So that'll be posted to TradingView shortly. I'm taking a look at Ethereum. This is the weekly chart. Really quite nice defined head and shoulders top pattern here, or top pattern, double top, whatever you want to call it. Rallied into the neckline of this pattern and appears to have stalled. This is on the weekly chart. So if I dive into the intradays, just to try and finesse the entry a little bit, I'm seeing that we are forming some sort of triangle pattern potentially, which I would have or believe would have the bias to break to the downside. Hasn't done that yet, so obviously highly speculative. Ideally, you'd wait for the break to occur, then trade the move rather than preempting it. But because I've got a gun to my head, I've got to come up with something. So I'm going to try and sell Ethereum today, expecting it to break down from this triangle, which will then trigger lower prices. It's currently trading at 1633 spot 6. Going to have a stop loss above the highs here that we've posted in recent sessions. So that comes in at 1687 spot 7. And going for a bit of a humdinger of a target on the downside, down to these swing lows that we posted and on the 26th of July, which come in at 1354 spot 8, looking for a 5.2 risk reward ratio return on Ethereum today. So obviously highly speculative, as they all are. We'll get that published up onto TradingView in a moment. So we've had a couple of viewers ask for a look at a couple of markets, which we wholly encourage. So if anybody is looking at anything, we will do our best to check them out. Rose has requested a look at sterling yen, New Zealand yen, and gold. So let's have a quick look at what those markets are doing. We did cover them briefly already, but we'll take another look today. So this is starting off with sterling yen. So daily chart. And we saw support work pretty nicely yesterday and has done over the last few sessions. So we've got support highlighted at 159.98, highlighted by this red line here. So we've got swing lows from the 16th of June. And prices retreated to that and bounced really sharply. A really nice bullish hammer candle formed on the 22nd of August, and we backed that up with follow-through buying today. So that looks pretty good. And higher prices towards the previous highs that we've got up here at 168.43 can't be ruled out. Ahead of that, we do have some resistance to target these two swing highs here, which comes in around 166.25. Now, I will also look at what we should be expecting from the Bank of England today, because this is obviously a key factor in anything linked to sterling. And we will be expecting some quite large ranges as a result of that, if historic numbers or anything to go by. So I'll come on to that in a moment. Looking at New Zealand dollar, Japanese yen, as I mentioned earlier, this is one of my favorite looking markets actually from a technical perspective. We've got a really nice uptrend that's formed here on the daily chart. This goes back to lows in the end of January. So the touch points along there, we've seen them attract buyers previously. We saw the support at 82.97 get a real good testing earlier in the week, but then we saw the buyers step back in and drag this higher. So a really nice reversal candle there on support, and we've seen some follow through buying. So that looks pretty good indeed. Major highs up here at 86.95. So potentially scope for higher prices there towards that kind of region. We do have these swing highs to consider ahead of that. So that may potentially limit the upside ahead of the 86.95. That comes at 86.56. Now let's take a quick look at gold. Again, Steve took a look at that himself this morning. We've seen a really nice move to the upside on gold of late. If we go back on the left-hand side, we can see there's multiple touch points here of this huge horizontal support line around 1676 spot 9, and the buyers have stepped back in really nicely at that level. Also a 61.8% fib level. So we've got this bullish outside day candle, or bullish engulfing candle, that posted on the 21st of July, and since then prices have continued to move to the upside. I would note that we've got this low here from the 16th of May, which appears to be doing a pretty good job as resistance. As you can see here, we actually posted a bearish outside day candle on the 2nd of August, a real strong rejection of that level, but we are moving higher again over the last couple of sessions to potentially retest that. If we scroll a bit further out, we can see there's quite a nice defined bearish channel on this at the minute, so that may cap the upside as well if we do get a break above this 1786 level. So needs to do a little bit more, I think, before I'd be considering committing on gold, but certainly had a decent move from support in the short term. So maybe want to consider adding or buying on a break above this high at 1786.97, or potentially, depending on your overall view, maybe fading into that level for a short-term short trade. Anything else come up, Jamie?
No, I think that was all that was asked for.
Okay, hopefully that was useful, Rose. And yeah, anybody else that's watching, please feel free to let us know what you're looking at. So what I wanted to take a look at now is the UK interest rate decision, which is due out today, because it can create quite a lot of volatility. So we've got a really useful tool on our calendar. So this is our economic calendar highlighting all the major events that are occurring today. So we've got the UK interest rate decision. Forecast is for rates to move higher, as we said. We've actually got a forecast in here of 25 basis points, although according to what I read earlier, we were looking at half a percent increase in rates. So what we can look at here is the history of these rate decisions and what assets have typically been affected and by how much. So if we look at cable to start with, we can see the history of the interest rate decisions. They were flat for a very long time. Then obviously we've started to see rates rising. So this is where we're expecting rates to get to at the end of today. But interestingly, what we've got here is the potential range of cable based on the last 10 events. So in the hour after the announcement for interest rates, over the last 10 events, we've actually seen a typical range on cable of around 52.7 pips on average. And in one day, around 67 pips. So there is a lot of potential here for some volatility. So please do bear that in mind. It could be a pretty choppy old session today for anything linked to cable. Let's take a look at sterling yen actually as well, just because obviously somebody requested that on the TradingView stream. And typically we see around 50 points worth of volatility after the Bank of England announcement. So again, expecting a fairly large range on a lot of these sterling markets today. So just wanted to raise that and let people know that it is likely to be a volatile session. In terms of other data today, it is really all eyes on the Bank of England policy decision at midday. But after that, we do have the weekly jobless claims number. That's at 1:30 UK time. So we'll be keeping an eye on that. That could maybe give us a bit of an indication as to what to expect from the big number tomorrow, which is the US employment report, or the non-farm payrolls, as I'm sure you would have heard it called. We've also got inflation data from the US tomorrow. So a pretty big day to end the week for us traders. And that is pretty much that. Jamie, you got anything to add at all?
No, I think all good from me.
Lovely. So we'll get our trade ideas posted up to TradingView. I need to do that now. And yeah, in the meantime, guys, have a fantastic day. Be careful of that number at 12 o'clock today. And we will be back tomorrow.
Cheers, everyone.
Take care. Goodbye.